Hello everybody again, this is Matador from freetradingvideos.com. It's June 3rd, it's Wednesday around noon Eastern Standard Time, and here is the S&P 500 again, 3-minute chart. We saw this gap down occurring this morning, bit of a rally right back up into that area where it gapped down. Then it failed right to the next logical place of support, which is right in this area. If you scrunch this up, and I'll show you on a 15-minute chart here, this is a pretty good sized gap fill. And that's what we're doing now. So we had lower swing lows, lower swing highs, our first higher swing low, higher swing high, and now we have about a little bit of a tiny intraday head and shoulders pattern going on here. This whole thing becomes a bit of a wedge. So now I'm looking at this whole thing as a low base, and you can actually do some Fibonacci retracements on this. And you can see that we're looking at about a 38% retracement at the most, between 23 and 38. That's not the best retracement ever. And again, I would be very careful, of course, how I went long in this environment because of this low base. It's definitely bearish. Here's that on a 15-minute chart. So back to this gap area. A lot of people who got trapped short are now buying and cover. They love that, getting a chance to minimize their pain. There's resistance above, support below, getting hammered out now. Be careful if this ever fails this area. We're into the 93, 94 area already. If we fail 93, we could look for the next logical place of support, which would be all the way back down to 92/9250 area right in here. So that's the support and resistance areas above. Last one would be 95, which would be amazing if we could hold up there. There's a 60-minute chart, and you can see that support right in there, right? So that's great, and this would also translate well to a daily chart. And we're just starting to hug back again in this high base area at the 200 MA. So we already knew what we were fighting, a lot of big run-ups. There are some relative strength and weakness stocks out there in the same time frame, but the biggest eye-catching feature to me right now is the TRIN. TRIN had started high, sold off quickly in the morning, again getting the bugs out, hovered right around 1, even dipped down to 0.8 at one point, and then consistently now has been in the 2.0 range. So that's twice as much volume flowing into stocks that are going down than up. Even though on the flip side, the trend Q is showing more volume flowing into stocks going up. That's probably the only reason that the markets are being propped up here, is because there's a divergence between the broad markets now. The VIX, as often can be a tiebreaker, is now tie-breaking to the downside. This is exactly what we're seeing in the broad markets inverse. So that is verifying that we're getting the sell-off. If this spikes at the same time the broad markets fail, be very, very careful, especially if you see the trend Q rising. And that's the essence of that. And again, I always say it, but I'll say it again, look for relative strength and weakness stocks in the face of this, and you can find some really great opportunities there. So trade well. I've been having fun with people in the chat room. We upped the limit to 40 members now, so if you want to give it a shot. It had previously kind of crashed our server. We've got that hammered out now, and eventually we'll raise that limit to 100 people. So get in there, check out the chat, and there's some really good opportunities in there as people are discussing things. It really helps to see what other people are looking at. No matter how good you are, you're always going to miss things without other people around. So nice camaraderie, great healthy environment, which is also fairly rare for the trading industry if you've looked around. So anyway, hope you have a great rest of the day. Look forward to D7's video this afternoon, and I'll talk to you soon.